Okay, welcome folks. We are in volume 6 of the Inner Circle Traders Market Maker Collection. We're going to be dealing specifically with the ICT buy model. Okay, and I know majority of my readers and listeners over the last 5 years dealing specifically with Forex. Uh, a lot of the concepts that I use in my trading actually stem from my days as a futures trader. And the market maker profiles actually go back to the latter stages of my commodity trading before I actually made a full segue into foreign exchange and trading spot. But we're going to deal with, again, primarily with the ICT buy model, but we're going to talk a little bit about the ICT sell model as a jigsaw puzzle um, perspective. In other words, how these two models mold together to give you a larger framework of what market structure is doing and how you can blend between the two and really trade without a bias, because I get a lot of questions about, how do I know what bias I should be trading for that particular day or that session or so and so. And a lot of the questions that are sent to me with that vein will be answered between Market Maker 6 and Market Maker 7. Okay, and again, it will not be a complete uh, you know discussion because it will be utilizing these two models in our specific trading concepts portions of this series later in this video series, predominantly the last three of the 12. Now again, if you have been following my work, you'll notice that this is a rather abstract fractal pattern that I have shared with the populace in the foreign exchange universe. Now, again, this is just my quick and dirty way of viewing market structure as it drops down into a level of buying interest for the smart money and what uh, may unfold as subsequent price action from the drop down into a support level. So let's talk about specifically what is an ICT buy model. And the first stage, obviously, when we're looking at this, again, very abstract uh, design, if you will, this area here, beginning on the left side of the overall pattern or model, is the initial consolidation. And this consolidation in the first green box on the left side, okay, is the building blocks of the initial drop lower. Okay, and the second stage is what is referred to as the run to support. Okay, and now what I'm doing is conceptualizing the overall framework of what builds the idea of an ICT buy model. Okay, I move down into a support level that will cause some measure of buying and then the subsequent price move higher. The third stage in the overall model is the smart money reversal. Now, 99.9% of the retail universe do not know how to trade at these levels. Okay, they don't want to be buying when it's most bearish. They don't want to see the market screaming down like this. Okay, because it's going to cause a fearful um, reaction in them. They're not going to anticipate the market moving higher. What will happen is they're going to be anticipating a continuation lower based on uh, the previous market action. Okay. Now, for this moment, as we're discussing, it's not important that we understand what specific time frame we're looking at because it's applicable on all. So, as I'm describing this, until we actually talk about the ICT kill zones session specific, that being the London Open, New York Open, and London Close and Asian session, those are going to be dealt with later in the series. But for now, just understand the building blocks that make up this pattern and how we can learn to anticipate it in our charts. It's one thing to talk about it in an abstract form like this, because I get a lot of flack from folks that are not really willing to put the work into learning it or seeking out and studying it. They want an ABC, here it is how it happens all the time type of approach to trading it, and it's not going to be that easy. It took a lot of years for me studying price action to be able to identify this stuff in advance back here at this stage in during the initial consolidation, then expecting the run to support, and then the smart money reversal at the low. Okay, and then there is an accumulation, which is going to be the low risk accumulation buy. Okay, that's the first of the blue area on the overall profile. Then we have the next higher blue area. Okay, and this can be a little bit tricky. Okay, and this is where higher time frame directional premise is going to be advantageous for you. Okay, because this is the very area here that will many times, if you're wrong on your prognostication of on the higher time frame where the market's going, and higher time frame can mean as much as a 1 hour charts perspective if you're seeing the market maker profile occur on a 5 minute chart. So if you see that on a 5 minute chart, again, you're going to be referring to a higher time frame, and you may not necessarily be referring to a weekly chart or a daily chart. It could be simply a measure of 1 hour or 4 hour or even a daily chart. But you'll learn that it's many times not necessary to go beyond the scope of two higher time frames. So again, keeping in line with what we've done in the past, 5 minute is subordinate to 15 minute, which is subordinate to the 60 minute. And again, if you're seeing this price pattern form on an hourly chart, the hourly chart is subordinate to the 4 hour, which is subordinate to the daily chart. And obviously, if you're seeing it form on a 4 hour chart, 4 hour subordinate to the daily chart, which is subordinate to the weekly chart, and so on. I'm not going to beat it in the ground. You get what I'm saying here. But the the fifth stage of the overall ICT buy model is going to be tricky for those um, traders that are looking for app solutions. It's going to have to be exactly as it's described here or conceptualized, and it's not going to always be like that. You'll see many times that the pattern itself will create a not a continuation long here, okay, or a reaccumulation, okay, which is described here conceptually. What it'll many times uh, provide us is an area for redistribution. Okay, much in the same area that we have in the second stage of the ICT buy model here. In this red area, once the move out of the initial consolidation takes place, this red area is when we anticipate another move lower down into an area of support, or what would be deemed an area of uh, buying interest. Now, again, we don't anticipate retail buyers. We're anticipating institutional, bank, large, deep pocket traders. Okay.